Okay, thank you. Okay, welcome everybody. I'm from Canada, and my work is related to banks, the financial side, and during the crisis terms, and stock market prices, and how they are going to be affected or something. And let's see that. And my agenda here in the first introduction, and then aim, what's my aim to do that, then data, and how to get this data, and how to manipulate this for the different cases, and for my study, and methodology, and findings, and conclusion in that way. And I'm going to finish my talk as early as possible in that way. Okay, and actually the financial crisis or fiscal crisis are very important for the world, and also in the countries and countries' economic life. And they are disasters sometimes because of the recession, and they are not gonna do anything and in trade or something. And this crisis affects this crisis affect the countries and people or the world socially, mentally, and economically. And this is just the ridiculous thing for the world. And Canadian economy also underwent the many crises in the past. And actually in 1929 and to this year, and there were approximately 9 crises during this term. And of course, sometimes this is, the Canada, first of all, is in G7 group, and it belonged to this one in 1976. And this means it's a rich country, it's a good country, and economically and everything. But again, it has the crisis, financial crisis as well. And Canada experiences some this one in different years, and the Gordon in 2017 and just gave the recessions and put them into different categories, and maybe these are given here. And then there was 2014 to 2016. And then the last one, you see, the pandemic crisis that started in March 2020. I'm sorry. And now my aim to do this research, and to gain insight into the impact of daily movement in stock market indices on the daily closing prices of banks during crisis periods. This means that how the indexes in stock market of the banks just affect the stock prices of banks, and what are the reasons, and which one affect this one much better than the other, and very in bad way or very good way, and the other one, of course. And how they are gonna be, if I'm gonna find, if I worked here 5 different crisis periods, and these crises, of course, I'm gonna give you the information, and these crises, if there is a pattern, and this means the same indexes affect affect the daily closing prices of banks. I'm just searching this, and these are my aim on this study. And first of all, the data and methodology, and how I'm gonna get this. I got the Canadian banks data, 5 major banks. These are 5 major banks, and actually the economy of Canada the stock market, at 10% of the stock market, just related to Canadian banks, 6 Canadian banks. And these are BMO, BNS, CIBC, RBC, and TD. And also we have the Sturgeon Group, but the Sturgeon Group is the investment bank. That's why it's not included in this one. And even they are major Canadian banks to study, I would like to see how their investments just affected by the crisis here. And this data, I got this data from the Toronto stock indexes, the stock prices, and the data covered period from 1975 to 2020. But of course, I have to do some work to study on this. This study, in that way, the daily closing price, I got this one as the dependent variable. And the other indexes, 23 indexes from here in this data set, and index 1, index 3, and I got all of them in this way. I just presented the names in that way. And how I got the periods, the decreasing periods or crisis periods. First of all, I checked the system, I checked the literature, and when the Canada had this kind of crisis, and also I just drove their graph all together and then see that the 5 different periods. I selected 5 different periods that the values decrease here, like this, and they are strong decrease in the stock prices here. These are the terms that I selected, and I called them as crisis 1, crisis 2, crisis 3, 4, and 5. And these are the terms, and I collected all the data in that way and specified the crisis periods and selected all the data accordingly and work on those data separately for 5 banks and 5 crisis periods. As the methodology, actually I use for this one logistic regression. For the logistic regression, I prepared the daily closing prices in the binary format. And the 0 for 0, I just assign 0 for the decreased prices and 1 for increased prices when I compare the previous day's price. And then I wrote the equation related to that. Anyhow, and when I worked, actually, I worked this same data with multiple linear regression. And I will let you know at the end of this, actually, I found different results with logistic regression and with the multiple linear regression. Maybe I suppose this is the reason why I'm working with the binary data or categorical data for logistic regression and for the other one, continuous data. And this is the way I have to explain the first one. In crisis period, and what happened in Canada, and the economic recession, the Canada experiences an economic recession. And of course, there were several downturns and the economic recession and many unemployment rate very increased. And then the DCP, DCP just decreased, and many industries just affected very badly for this one, and especially manufacturing and construction, and they were hit, and there were many layoffs and the job losses, and they brought this one into economic recession. When I work on the data for this one, And I saw that index 9, index 31, 34, 36, 38. And only 3, 4, 5 of them just seen in my output. And for BMO, but you see BMO, this is the one, and index 34 and index 38 and index 36, and the BNS as well, only the index 9 and index 38. When I compare all of them, when I see that, which one is the most important? And this means, and I have to check which one is the common one. And when I check that, you see index 38 is the one, all of them, not the, except CIBC here. And this will happen because of the different investment tools they each bank use. And I finally decided that, and each bank has different investment tools, investment materials. That's why, and this will happen. And of course, their amounts will be different as well. But for this crisis term, index 38, and this is the value weighted index over $2. And this is, we will see this on the other crisis as well. Let's see that on the other crisis. You see, this is the crisis period too. And actually, this is this crisis started in Thailand, and then in Asia. It started in Asia, and then just spread out the other countries, and it's kind of world economic crisis. And actually Canada is more resilient about this one, but the banking sector especially, and because of the rules that it has. And but in that case, Canada, just the producer, oil producer, manufacturing and everything, and this connections, this trade in China, in Asian countries. Because of that one, and the Asia in crisis, and they are not demanding the materials from Canada, and because of the currency, and the currency is high, and they just look for the other countries which they bought the less. That's why Canadian economy just gets worse and worse in that case. And of course, our stock market just impacted during this crisis as well. According to the results and this recession, this is not the recession as similar to crisis 1, and but this is economic crisis. In that way, again, when you see that, index 38 is the most important factor here. And when you see that these are all positively affect our daily stock prices. The others, and let's see, BMO only the 38, index 38. But in BNC, two more, but the one, both of them negatively affect the result. And for TD is the second bank, top bank in Canada. Sometimes RBC is the top, sometimes TD, and it depends on the year. Anyhow, and in that way, you see that again, index 38, similar to crisis 1, is the important the index here. And in crisis 3, and what happened in Canada, and in that way, again, there is an economic recession. This is the significant economic recession. And the country experienced a contraction in economic activity, and GDP growth, declining GDP growth, and rising the unemployment rates, and of course reduced business investment. In that way, the many manufacturing and some industries, not some, all of the industries just very badly or dramatically affected from this one. And housing, automotive, or manufacturing, similar thing. When we work on the data here with LR, logistic regression analysis, again, we are going to see that the index 38 is the common one. And but surprisingly, we are seeing that index 36 again just added to index 38. And because this reason of the crisis is a little bit different from crisis 1 and crisis 2. That's why, and index 36 was added to this result here. But again, this index 36 or index 38, both the value weighted indexes over $2, and the other one, 36, actually is the equal weighted index, over $2. And of course, during that term, and the people or investor must be careful about this kind of the data set indexes here. And in crisis 4, actually, this is the, again, any crisis in Canada, but the main reason for that one is the oil prices. Oil prices dramatically decreased, and of course, and Canada is the third oil producer in the world, and because of the currency, when they sell this and trade, and of course, the economy getting worse and worse in that way. And only the part, this is the regional one, because those regions relate to Alberta. This is the main producer region in Canada, and this is much more affected. And oil price, drop in oil prices, and of course, and in that sector, and there were many job losses, and of course, that affects our economy, and our economy getting slower and slower growth. When I check the results with the logistic regression, I saw that again, of course, some others they're just seen with different one, but the most common index again, index 38. And you see that they are positively affected positively our crisis term. The daily stock prices here. And the last one, the crisis 5, and this is of course pandemic, and the pandemic just started in March 2020, and then it's continuing on. And that spread of the virus, and gave many problems to the world, and of course this is widespread the job losses during that time, and the many sectors just closed and shut down, and most of the people lose their jobs, and of course economic part in all over the world just turned down. And we are seeing the same results now. It's continuing as well. And anyhow, this affects our stock prices and Toronto Stock Exchange prices as well. And in this case, when I worked the logistic regression on that one, you see, and index 38 is not going to be in the outcome. And this is a little bit change for this one, index 37. Index 37 is the most important one for this type of crisis, and of course BMO has different investments. That's why there is no result, no index 37 in BMO. And how about the conclusions? Actually, I would like to give the conclusions. In each crisis, when we see that, and I don't want to give them one by one, actually, when I see as overall all the crises, index 38, this is the one, 38, this is value weighted index, the investments over $2, and anything else that over than $2 value weighted indexes. This is very important for the investor and for policymakers or the banks as well, and they have to change their investment portfolio accordingly. And this gives us the information. Index 38 is the most important one for the economic crisis. But on the other hand, if the reason for this crisis is different, as pandemic, and this is related to health issues, in that case, and the direction of the index 38 change its the way, and the other one, index 37, comes up. And this means that as a result, I have to summarize everything in one part. In that way, the index 38 and the most of the investments, banks and everybody, and just be careful about the indexes and their portfolio, and accordingly they have to select the investment as an investment tool, the value weighted indexes for their prices, for their portfolio. This is my suggestion at the end, because even I could not find any pattern for this one, and because this depends on the reasons of crisis, and also the differences, different investment materials in the portfolio of the banks. And let's say when the BMO just invest in different materials, and the TD in different materials in stock market, and accordingly, and their portfolio would be changed. And this is the one what I have to tell you. Actually, for the further studies, I did this one before with MLR and multiple linear regression. I found that the financial crisis, financial index, is the most important in each case, but not index 38. I don't know what happened, and I checked all the requirements for LR and MLR, but I don't know what happened, and I thought at the end because of the system, because of the data dependent variable is different in different format in MLR and logistic regression. That's why I got this kind of results here. And for further studies, that's why I would like to suggest that for further studies, maybe partial least square method. This is better than maybe logistic or multiple regression, or structural equation method, or machine learning method. I did this one with machine learning. I got similar results with LR and with LR. But I don't know. I will try my best and to get good solutions, and to have a pattern what happened for further crisis, and accordingly the investors just get their invest in that way. Anything else? Oh, there are some limitations of this work. Actually, I don't know the investment portfolio of the banks. If I know them and how much or how the amounts of the investment tools, and that's why they are forbidden for us. That's why I couldn't get this, and in that way, I just use their data set directly without knowing their investment portfolio. And also the missing values. Some of the items just included some of the indexes started some time, and some of them in different times. And that's why I just remove this kind of missing data from the system. And also the last one, actually I use only price indexes. I didn't use return indexes, and because when I use them, they are correlated to each other. They will give the similar results. And maybe as in the literature, I will do this with the return prices, and this will return indexes. Maybe that will give us the good result or better result than the daily closing prices. I mean the prices. Yeah, that's it. Thank you. If you have any question or comments, I appreciate for that.